Good morning and welcome. You're watching Market Cafe on ET now. It's a fresh new day of trade in front of us. I'm Harsh Saita. With me is Snehisha. Over the next hour or so, we'll take you through all the stocks that you need to keep your eye out on, and of course, what are global cues really indicating. And let's start off right off the bat with the Gift Nifty, absolutely flat, Snehi. But no complaints there after what the broader markets did yesterday.
Absolutely, Harsh. With that, let's also shift focus to what the global markets did and take a look at what the global handover looks like for us today. And let's begin with the US stocks then. And US stock futures were little changed Tuesday night as investors look towards the release of the Consumer Price Index for more insights on inflation. Now, this data is due today. The major averages all posted losses during Tuesday's main trading session. Nasdaq Composite was particularly hard hit, declining 1% as tech names came under pressure. The S&P 500 fell nearly 0.6%, while the Dow took less than 0.1%. Now, let's look at stock-specific action then. Apple slipped 1.7%, weighing on the indices, while Oracle notched its worst day in more than 20 years on the back of disappointing revenue as well as soft guidance. Now, Wall Street's focus is now turning towards the August CPI report due today morning. Economists estimating a 3.6 year-over-year rise in inflation according to Dow Jones. This would mark an increase from the prior month's reading of 3.2%. Now, on the other hand, core CPI, which omits food and energy costs due to volatility, is forecasted to have risen to 4.3% in August compared to 4.7% gain in July. Now, European stock markets closed slightly lower on Tuesday, pairing earlier gains as investors monitor a busy week for economic data. Now, the Pan-European Stock 600 ended 0.2% lower, with sectors and major bourses pointing in opposite directions. Chemical stocks were the ones that dipped 1.5% to lead the losses coming in the European indices, while autos and telecom stock rose 0.7%. Now, the index gained on Monday as investors were cheered by signs of easing deflation pressures in China, sending metal prices and mining stocks higher. So roughly this is the handover coming in from US as well as Europe. Well, US closed in the reds. Let's see how that pans out for our markets this morning, Harsh. But this is on the equities front. Harsh, take us through what commodities did.
Well, yes, absolutely. And commodities, essentially we see oil really jumping, and that's on the back of the fact that you've seen a commentary coming in from the OPEC that growth will continue to sustain globally, and therefore you've seen oil prices jump quite a bit. You've seen we're currently looking at WTI at $89 a barrel. We're looking at Brent at $92.3 a barrel. So a 2% rough jump, and it's very close to its 10-month high as well. What OPEC seems to suggest is that robust growth will continue to drive oil demand forward in 2023, for the rest of 2023 as well as 24. They're citing signs that major economies are stronger than expected, and OPEC's monthly report forecasts world oil demand to rise by 2.25 million barrels per day in 2024. So on the back of that, you can see a bit of a spike on oil. That's where oil, of course, is. Let's quickly also have a look at gold. Gold prices largely unchanged at $1,935 an ounce, but it slipped slightly versus yesterday on the back of the US inflation numbers, which are expected to come through. So that will, of course, be a key metric to watch out for when it comes to gold as well. So largely, you're seeing oil spike a bit. Gold, of course, everyone's eyes skewed on the back of that US CPI data.
Absolutely a key metric to watch out for in trade today. But with that, let's also look at all the other important cues that you should be keeping on your radar. And India trade data will be out today, obviously, along with that US CPI number. On the corporate action front, you've got Bajaj Electricals. Well, today will be the last day to buy the stock before the spin-off business takes place. For Concord Biotech, the lock-in period will end today. Let's look at some action coming in on the primary markets as well. On the IPO action, now RR Cable Limited opens for subscription today. So if you want to subscribe to their IPO, today would be the day to start doing so. So keep an eye out for all these cues in today's trading session.
Right. Let's quickly move on to the other piece of news, which has been coming through since yesterday. Of course, good news for all Apple fanatics this morning. Slew of launches from their annual launch event at Apple Park in Cupertino, California. Company has unveiled its iPhone 15 and iPhone 15 Plus priced at $799. It also unveiled the phones iPhone 15 Pro and Pro Max upwards of $999 a piece. From the basket of launches, we also have the brand new Apple Watch and the updated AirPods. Let's hear out what the CEO of the company, Tim Cook, had to say about the slew of product launches.
Apple Vision Pro, an entirely new spatial computing platform where your digital content seamlessly blends with your physical space. Everything looks better on Vision Pro, including your favorite TV shows and movies, like the new season of The Morning Show, which starts this week. And the response to Apple Vision Pro has been absolutely amazing. Our Apple team is also making great progress with Vision Pro, and we're on track to ship early next year. We look forward to sharing Apple Vision Pro and its breakthrough spatial experiences with all of you. Now let's get to the big news of the day about Apple Watch and iPhone. Their innovative features and industry-leading technologies help improve our lives in so many meaningful and delightful ways. Apple Watch helps us stay healthy, active, and connected. And iPhone impacts just about everything we do. They're with us all the time, and if you left either one at home, I bet you'd go back and get it. So we're excited to talk about how we're taking Apple Watch and iPhone even further. I love the new Apple Watch Series 9 and Apple Watch Ultra 2. With incredible new capabilities, they're the most technically advanced watches we've ever created. And I'm really proud of the Apple Watch team for delivering our first carbon neutral product 7 years ahead of our company-wide 2030 goal. iPhone 15 and iPhone 15 Plus, now with Dynamic Island, an incredible camera system featuring a 48 megapixel main camera and the power of A16 Bionic in a gorgeous new design. An iPhone 15 Pro in titanium for a durable, light, and stunning finish.
Well, that's the word coming from Apple top boss. Yeah, that's the word coming in from Apple top boss Tim Cook. But in good news then, your iPhone will now have the Type-C charger instead of the Lightning port. Apple has also gone ahead and announced the widely anticipated USB-C charging port priced at $29. The shift to USB-C chargers for the iPhone 15 will mean that Apple users' old Lightning cables will no longer work.
Right, and let's move on. Some other important news that we're tracking this morning is the world's largest contract chip maker has approved an investment in its arm of up to $100 million post-listing. ARM said that technology companies including NVIDIA, Apple as well as TSMC and others were interested in purchasing up to $735 million worth of shares in the IPO.
And with that, let's shift gears and place our focus on macros because Goldman Sachs CEO David Solomon has said that the US is likely to avoid a recession even as he warned that inflation will continue to plague the market. The current trajectory of the US Treasury's forward curve shows rates declining in the future, but Solomon cautioned that might not materialize.
Right, let's quickly move on. Geopolitics. North Korea's King Jong-un has arrived in Russia for an expected meeting, with Russian President Vladimir Putin. This meet has sparked concerns about a potential arms deal for Moscow's war in Ukraine. Remember, after decades of complications, hot and cold relations, Russia and North Korea have drawn closer since Moscow's invasion of Ukraine in 2022.
And shifting focus from global to domestic macros, retail inflation eased to 6.83% in August from a 15-month high of 7.44% in July. The August print is slightly below expectations but remains way above RBI's 6% limit. Food inflation clocked in at just under 10%, while core inflation stood at 4.8% as against 4.9% in July. On the other hand, industrial output grew by 5.7% in July, according to government data.
See, RBI has limited role to play as far as food inflation management is concerned. Clearly, the kind of food shock that we saw, which was led by perishable, has largely reversed. I mean, you're seeing tomato prices, which had seen the highs of 200% month-on-month increase in the month of July, has started to contract very sharply. And September month will see further contraction to the extent that you'll probably see it going back to the, pre-shock levels.
The commodity prices and the corresponding inflation does affect the market, but the effect, I consider it as fairly temporary. What is more important is the overall profit outlook for the various companies, particularly on the Nifty 50 side. The outlook has been such that with growing capex and slightly better demand growth coming in, we should be seeing upgrades in EPS, which we have seen. The entire calendar year so far has seen mostly upgrades in EPS relative to the downgrades.
Right, those were thoughts on what the CPI numbers really look like. But quickly, we'll slip into a very short break. More, of course, on the other side, so stay tuned.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, the RBI has revised its guidelines on how banks need to categorize their investments in a bid to align them with global standards. My colleague Ankur Mishra is joining in on the phone line with more details on this. Good morning, Ankur. Tell us what you're picking up.
Yes, definitely. It will be a win-win situation, especially for banks per se, because till now, there were three investment categories which were there. One was available for sale, held to maturity, and held for trading. Now, the problem in the feedback which was received to Reserve Bank of India was that held for trading the portfolio, there was a ceiling of 90 days for banks, and they have to necessarily sell in that period. Now, with the revised guidelines, that embargo has been gone, and there is a new category which has been created for banks, that is fair value through profit and loss, and held for trading will be subset of this. This means that the new norms will do away with the 90-day ceiling of holding period under HFT. And now this will remove a ceiling for the banks, and there will be a kind of breather, and they can align their investments accordingly. However, Reserve Bank of India has clearly said that the disclosure should happen at the time of investment only, in which category that needs to be put in. So all these guidelines have been released, and the application of these guidelines will be from April 1, 2024.
All right, thanks Ankur for taking us through that. But let's shift focus from banking to crude then, because with crude crossing $90 a barrel, oil marketing companies have started facing the heat. ET now has learned from sources that OMCs have yet again started incurring losses on sale of petrol and diesel. So any hope of retail price cut of petrol and diesel is unlikely to happen soon. Prakash Priyadarshi has more details on this report. Take it away, Prakash.
Yes, we are learning from our sources that the oil marketing companies have once again started incurring losses on sale of petrol and diesel. Sources are informing that the OMCs are facing losses on back of rising crude oil prices, which have increased to $90 per barrel. We are given to understand that under recovery on sale of diesel has increased to rupees 8 per litre, whereas there is under recovery on sale of petrol as well, which is around rupees 3 per litre. As you are aware that the oil marketing companies have not revised retail prices since April 2022, which has put more pressure on the companies. But what we are understanding from our sources is that oil marketing companies feel under recovery may increase if crude oil prices goes further high, which is a big challenge for the government and oil marketing companies at this point of time. Sources are also informing that oil ministry has been kept in loop by oil marketing companies on rising under recovery on sale of petrol and diesel at current market prices. As you are aware that oil marketing companies were making profit till mid-July, but now they are facing losses due to rising crude oil prices. Therefore, any cut in retail prices without government intervention at this point of time is very unlikely. As you are aware that oil marketing companies have registered a strong performance in last 2 quarters, but industry sources are maintaining that their accumulated losses are still at rupees 1.5 lakh crore.
Well, thanks for that, Prakash. Let's quickly move on. Yesterday was a day of chaos, especially in the auto stocks. And This was after Road and Transport Minister Nitin Gadkari said he will seek a pollution tax in the form of additional GST of 10% on diesel vehicles. Stocks of auto majors such as M&M and Tata Motors saw quite a bit of selling before, however, Gadkari clarified that there is no such proposal currently under active consideration by the government. Let's go across to Sumit Chaturvedi, who joins in with the details on this one.
Well, and keeping it with autos then, festive season is around the corner and Motown is leaving no stones unturned to make the most of surge in demand. Listen in to top automakers in the country on how they expect the festive season to pan out.
See, the festive season already started in August, especially when we talk about Kerala, where Onam has already started. We are already into 20-25 days of that period. And we are seeing quite a strong growth, and you are seeing the industry also taking off from August. So we believe that this augurs well for the festive season, and we should be seeing a very strong demand in the festive period. And in preparation towards that strong period, we are ensuring that supplies are being ramped up.
The SUV segment as a category has been growing from strength to strength month on month. The category has been growing relatively faster than the overall passenger vehicle segment. When the passenger vehicle segment is growing at about 15%, the SUV segment has been growing at over 20%. Now, if we talk a little bit about M&M, August has been our best month so far. It's our highest record month. And the reasons why the performance has been so strong, couple of points, and that also kind of plays into the festive season.
So I think the good part of this festive season is it's spread over 4 months. You know, it is generally everything happens in September and October, but this time Diwali is in November, Dussehra is in October, Ganesh Chaturthi is in September, and Onam happened in August. So it's a spread over period, and that actually gives us a bit more time to also do production and cater to the market demand. Coming back to the demand, I would say the order intake is great. You know, the moment we introduced the GLC, it was sold out, and a lot of deliveries happening there.
See, I think the MHCV industry is not so much affected by the festivities, right? But that is already growing well, and I think that growth momentum will continue or better from what we have seen in April to August period. LCV industry is a little bit slowed down in April to August. We were expecting a growth of about 5 to 6%, which has not happened. But I think with this festive season, LCV industry in any case is affected more by the festivities, etc. So I think this is a good moment or good period of next couple of months that we'll see LCV industry also turning around and getting into a good growth mode.
Well, that's the word coming in from top automakers in the country on how they think the festive demand is going to pan out for the auto sector. But anticipating an upcoming price increase in the auto sector, let's hear it from the leading auto majors about their strategies to address as well as alleviate the concerns for consumers.
Frankly, we have always tried to really keep the prices in check. We are a cost reduction is a very key DNA, if I may use the term, for Hyundai. You see that this year in terms of foreign exchange and all was not a very good year. So there was a lot of cost escalations. At the same time, we have tried to really keep the price rises in check, and we hope that going forward we pass on the minimum only to the customer, and we're able to absorb unless it is a more of a regulatory change or more of a clearly this thing, we try to absorb as much as possible. Sometimes it becomes imperative, then of course we have no choice but to increase the price.
There are reasons behind why the price increase is announced, which is generally to do with normal inflationary tendencies in terms of the material side. So that is something that is evaluated from time to time, but suffice it to say that we are always very concerned to make sure that we try to buffer any increase and not pass it on to the consumer as much as we can.
There have been input cost increases on two fronts. The first one is the commodity cycle, which we had for almost last 24 months. But it is also due to the migration that the industry has done to BS6 phase 2 norms. So we have been able to pass on some part of it. The entire part has not yet been passed. So going ahead, we are likely to look for some price increase. But as you also noticed, I think for past 1 year, we are looking at not increasing the sticker price, but actually pulling back the discount. So the market operating price, as we say, is what we've been increasing. So this is something that we have done in a very intentional manner and has been working pretty well.
Right, let's quickly move on. Vinod Agarwal, Managing Director at and CEO at VE Commercial Vehicles Limited, says that vision for auto sector comes from the economy. Sumit Chaturvedi was in conversation with him. Let's quickly listen in to a slice of that one.
Absolutely, I think auto sector is very clear that sustainability is the future, and with that, that is why this SIAM convention entire theme is way ahead for sustainability in automotive sector. So therefore, we have taken steps in various areas which are for sustainability, starting with the alternate fuels or electric vehicles or recircularity or safety or localization. So we are touching each and every aspect of sustainability, and that you have seen today even in the various other panel discussions. The entire theme has been the sustainability. So I think auto sector is preparing itself. Already the transformation has started happening, and it will keep on happening, and I'm sure we will be definitely moving towards a very, very you can say our objective of achieving decarbonization and sustainability for the country.
You also mentioned through PM's message today morning that auto sector is a major contributor of growth, of employment, and all of the increasing GDP as well. From here on, where do you see for the next 10 years the growth of auto sector in India? Because so far we have seen ups and downs. We have seen COVID crisis, we have seen major 2008 economic crisis as well. Thankfully that is now all history. From here on, what is the long term vision for the auto sector from here on?
I think the vision for auto sector comes from the economy, and auto sector is also the backbone of the economy. Therefore, when we are very clear that Indian economy is going to grow, there are various fundamental reasons for that growth, and we already have become 5th largest economy in the world, and it is now also becoming more and more clear that we will become the 3rd largest economy in next 3 to 5 years when our GDP, our economy goes up to 5 to 7 trillion US dollars. Now, when the economy goes to that size, I think auto sector is going to drive that growth. So therefore, auto sector will be much more bigger than it is current, because we have seen that when the GDP grows, the growth of auto sector is even more than the GDP. If GDP grows by 8%, auto sector growth will be more than 8%. So therefore, we are expecting very good growth for auto sector, and it will be there in all these sectors, like starting with passenger cars, trucks, buses, two-wheelers, and of course there is huge potential for replacements. Like for example, if scrappage has to happen, recycling has to happen, which is also overdue, because if there are 15-year-old trucks running on the roads, those will come for scrapping, and when those get scrapped, it means there will be more sales. So therefore, we are seeing very
well, expecting good growth across the auto sector is the word coming from MD and CEO of VECV, Vinod Agarwal. But with that, let's slip into a very short break. On the other side, we'll take you through all the stocks that could be potential buzzers in today's trading session. So stay tuned.
Right, welcome back. Thanks for staying tuned. We'll quickly move on. Of course, before we take you through all the stocks that are in news before trade today, as well as what you should keep on your radar, let's quickly take a snapshot from the F&O space. Ansh is here with us to try to break down what levels we should look at. Ansh, take it away.
Sure. So Nifty made record high for second consecutive session, but failed to sustain about 20,000 mark. Also in a single session, mid-cap erased its last 4 session gains and small cap wiped its last 6 session gains, and both of them formed bearish engulfing pattern, which usually indicates a potential reversal in trend on downside. So it was a strong sell-off session for the market. Now let's see what happened in F&O segment. Nifty futures closed in flat, which indicates neutral sentiment, whereas on the option front we saw active call writing at 20,100 strike, which indicates that traders are expecting some resistance around this level, whereas on downside some put unwinding was seen at 19,850. This is usually seen when market starts to sell, which is a bearish sign. Now let's shift our focus to what FIS did. In index futures, they added around 10,300 long contracts, because of which we see FII long positions jumping from 60% to 63%, which is also a positive sign. So in a nutshell, we can say that F&O data looks a bit on a cautious side, but on charts, Nifty still seems to have an upside strength till 19,850 level stays protected on downside on a closing basis.
Well, Ansh, let's hope those levels actually do stay protected. But with that, let's also take a look at all the important stocks that could be potential buzzers in today's trading session. Ansh, take it away.
Sure. So NTPC will be the first stock in focus for today's trading session, as company has added unit 1 of 800 megawatt capacity in the Telangana super thermal power project to its installed capacity, making it 57,838 megawatt for NTPC Limited and around 73,800 for the whole NTPC group. Apart from this, Vari Renewable Technologies will also be in focus, as company has received letter of intent to provide EPC services for a 52.6 megawatt solar power project. RITES and CFM Angolo will also be in focus, as they have signed an MOU for cooperation in railway development and related infrastructure services. KC International has secured new orders worth 1,012 crore across its various businesses. Lastly, Wipro will be in focus, as company has streamlined its group structure by transferring 100% shareholding in Wipro 4C NV to its subsidiary. So keep an eye on the stocks.
Right, those are all the stocks that are going to be in news today. Keep your eyes out on that one. Thanks so much for that, Ansh. Let's quickly move on to Vamakshi, who's here with a lowdown on all the brokerage notes that have come through. Vamakshi, take us through the key ones.
Yes, let me first start off with M&M. Now, the stock was in focus yesterday and will continue to be in focus today. But today it is on the back of a brokerage note from HSBC. They have highlighted that the growth is seen moderating, but the risk reward for this stock looks quite attractive. The tractor business has surprised positively, but there are some concerns with respect to the underlying monsoon trends. Apart from that, they also see some downside risks as far as the FY25 tractor growth is concerned. But on the other hand, the SUV business is expecting to see continued traction. So all in all, given all those factors, HSBC has maintained its buy rating on M&M, but not just that, they've also gone ahead and hiked their target price to around 1,800 rupees per share. Apart from that, keep an eye out on Star Health as well. We have a note coming in from Nuvama. They have highlighted that the company does have a very strong product suite. They have steady high renewals as well as fiscal latitude in the EOM business. Loss ratios look quite comfortable. The network effect is expected to deepen the company's moat. In fact, now they're expecting greater network effect with scale. In turn, it could drive up the return ratios. So given all those positive factors, Nuvama has initiated coverage on Star Health with a buy rating target price of 770 rupees per share. Lastly, let's also focus in on Tata Chemicals. We have a note coming in from HSBC. Now, soda ash prices in China have increased sharply, but what HSBC believes is that this could be temporary and this is expected to normalize soon. Apart from that, Tata Chemicals also has capacity expansion plans in India, US as well as Kenya over the next few years, and this in turn could support growth. But however, there is some downside risk as far as the supplies from China is concerned. So given those factors, HSBC has maintained its buy rating on Tata Chemicals, given a target price of 1,100 rupees per share.
All right, thanks Vamakshi so much for taking us through all of those important brokerage notes. We will be keeping an eye out for all those stocks in today's trading session. But let's move on then, because the biggest market voices have chipped in to give their advice on how to invest in the markets right now. The exuberance in broader markets could come to an end soon. This is what they're warning. They believe most positives are already priced in. And Sunil Singhania also says that we should not get sucked into FOMO. Listen in.
Indian market, has a tremendous journey in the last few years, and it's shining very well in the global arena. as an economy, as a market capitalization, and by all standards. It's something great news for India to celebrate.
All the good news are there in price. That does not mean that market is going to fall today or tomorrow. This may continue for 1 month or maybe for 2 months. But of course, it is not going to last forever. 100% it is euphoria. It is you can say that FOMO or whatever the terms we use in this market. So people are still fascinated about now penny stock and cheap stock and chota price ka stock. SME also, I think psychologically people treat at SME like a penny stock. I think so. SME is not a penny platform. Let me clarify this thing.
The country is firmly, on track to continue its growth rate, being one of the fastest growing economies in the world. And for a change, I think this milestone does not sort of scare you. I think this is a milestone which is backed by fundamentals, which is backed by optimism that this growth rate is going to continue. And therefore, I think it gives confidence that this is just one of the milestones. There are many more which we need to conquer as we move ahead. I think one has to be definitely optimistic because there is still a lot of room ahead for the economy in the markets, but extremely cautious of not getting sucked into this FOMO kind of a situation.
Once again, euphoria which has made a comeback. So I think what I feel is that the mid caps and small caps could take a bit of a breather, and you're seeing that on the screen today with the downtake. And this could continue for some more time because there is clearly room for some downside. But I think the focus is really going to move to the large caps from here. So the large caps can make up for the underperformance of the last couple of months is what the view is for the next few weeks. And we do see the Nifty gradually moving towards a level of 20,400. I know it's not big in percentage terms, but unfortunately, I don't have large targets to work with because I do believe that the Nifty is going to be in that band of 19,500 to 20,400.
We have booked profits in Tata Tata Consumer and Tata Elxsi later. But in Tata Elxsi, we booked profit, very early, around 4,000 levels. Then it doubled from that level, but no regret. We have moved into Tata Communications since last 2-3 years, and we continue to hold. We don't mind a correction happening sometime by 10-15%. So even what we discussed, the Raymond. So we continue to hold.
Atul Auto has an EV story which is going to play out, which has started playing out. Stock is expensive. Let me tell you, if you will study the balance sheet and financial numbers, does not support the current price. So I don't want to say anything else. And Weber Global, as you had named, so they are into e-commerce company. That is euphoria has cooled down, and this is what keep on happening in the market. So these story are e-commerce story. I haven't sold any shares of Weber Global because I think story is yet to play out.
I would definitely urge that this is not the time to just blindly get into something because there's a name defense or a railways or a shipbuilding or an EMS attached to it. Be discreet. There is, as I said, a lot of opportunity in these sectors. I think we have been extremely positive, particularly on the steel cycle and also within steel, specialized steel. I would be in that camp which would say that in the next 6 months, banks should outperform the Nifty.
Power, I think, still has a lot of upside left. I mean, look at Tata Power, JSW Energy, CESC, and some of the smaller mid-cap names. I think there it's a more structural trend. I don't think it's got parabolic as yet. So I'm still comfortable holding on to power and buying power on dip.
Well, those are the largest market voices. But, another company which will be in focus today, new IPO, new listing, RR Cable. Well, largely into the cables business, which has been in focus of late. You're seeing the likes of a Finolex and a Polycab really rally. And RR Cable is the new kid on the block, if I can call it. Fast-moving electrical goods, cables, wires is what it's into. Date for subscription September 13th to 15th. The issue size is 1960 crore, shade below 2000 crore. The OFS is 1780 crore. Price band is 983 to 1035. And who is selling? Well, the promoters around 450 crore and TPG is selling around 1330 crore. Proceeds of the balance to be used for debt repayment. Largely RR Cable, when we're looking at the numbers, revenue growth is extremely strong for the company, especially in the B2B space as well as the B2C. We're also seeing, with regard to financials, revenue growth of 31% over FY20 to 23. EPS growth, though lower on the back of slightly lower margin profile that the company holds versus peers, 6% margin profile and EPS growth of 16%, 20 to 23. So, of course, RR Cable will be one decision maker of many for investors today.
Well, new IPO to watch out for, but with that, we're completely out of time on this edition of Market Cafe. But while we bid you goodbye, you don't go anywhere because the market takes all the action ahead.